Creamer Media's Mining Weekly Online is talking to Kobus Lutz, the CEO of Pan-African Resources. You've got a nice mix now of surface operations that quick yielding, especially after capital is spent, you get a big return quickly, and you've also got the underground. How are you going to squeeze more out of these existing operations without expending more capital?
Well, we're very happy with certainly with the performance of our surface assets. As we mentioned, Phoenix has turned around and generated close on 30 million rands worth of cash in the last year, despite the issues we're currently having with IFM. And then obviously the Barberton tailings plant has been a fantastic success, payback of 18 months, producing gold at under $450 per ounce. Recently, as you said, we commissioned the ETRP at Evander. Again, great success, lesser ounces, 10,000, but still, producing at a very competitive cost with a very long life of mine. So I think it's fair to say, as you've pointed out, that we are now very firmly entrenched as a surface tailings operator and miner. And then obviously underground, as you said, we have to continue to focus and ensure we get the maximum gold at the right price out of underground. As you know, underground operations, most of the costs are fixed, the bulk of it 80% or even more, which means we have to get more ounces, and that's what we're doing both at Barberton and at Evander. There's been studies done in terms of eliminating the decline system that we have, all the belts, a number of other initiatives that we've looked at Evander, but the key focus for us now is just to get the mine to operate optimally using the existing infrastructure. As you've said, we're not going to spend a lot of capital in terms of new development at this point, but certainly that's an option in future. And as you've said, we have a great resource base, more than 30 million ounces. There's a lot of value in that, even though it's not recognized at the moment. So the key for us is to get Evander to work as it should work, and I think then you will see a bit of a re-rating as far as our valuation per ounce is concerned. The immediate focus again is focusing on operations, ensuring those work, maintaining and improving our dividend, and then I think we'll have a license to do other things. At present, our shareholders want us to focus on operations, but as you point out, we do have a number of very exciting brownfield projects. We've mentioned Evander South in the past. It's a great resource, 6 million ounces, actually a little bit less now, but at a good grade, 5 to 7 grams a ton head grade, very shallow, 300 meters below surface. That's a great potential project. We also have the much larger tailings plant at Evander, we call the Ilekulu, and certainly with the success of the ETRP, we'll be having a hard look at that again.
And obviously your focus is on operations, but sometimes M&A opportunities pop up that are sort of irresistible and compelling. Do you see anything on the rising that could do something for you in the precious metal space?
Martin, we're constantly looking at opportunities, but again, the focus is operational at this point. If we see the right opportunity, and it's fair, you point out that there are opportunities around. Certainly in Africa, there's a number of developers that have run out of money, actually don't want to develop a mine per se, and certainly the market for selling is not great at this point. We look at opportunities all the time. We're fortunate. Our level of gearing, certainly in comparison to the rest of the sector, is very, very low. It gives us a lot of headroom. We've recently negotiated a new revolving credit facility with our club of banks. Again, it gives us more flexibility and the capacity to actually increase that.
You also seem to be doggedly adhering to the dividend.
Our shareholders have come to expect a very attractive dividend from Pan-African. At the moment, the dividend yield is just above, close on 8%, which is industry leading, certainly in South Africa and globally. And we can continue to pay the dividend. If you look at the cash we generate from operations, we're comfortable that that will generate cash sufficient to cover the dividend, and then also look after other instances of growth and the like.
That was Creamer Media's Mining Weekly Online talking to Kobus Lutz, the CEO of Pan-African Resources.